Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's September the 9th. This will be our chart lesson for today. And because of the holiday on Monday, the weeks we're halfway done. Actually, as far as chart lessons are gone over, or as far as it goes with the chart lessons, we only got one more day this week. So it's been a quick week. Seems like it really flew by. It was a really good trading day today. This When you have a lot of volume like we did, this is what you hope to see. A nice downtrend, um, like this one. This was a really interesting trend, and actually this one I need to. You could have actually drawn it from off this right here, but this really needs to be extended because it continues to come into play down through there. You can see that prices get back within that channel in that midline and just keep working lower down through there. But anyway, it doesn't really change anything, but it might have given you a little more encouragement to take a couple more of these trades down here late in the day. Um, but I circled this one in purple. I want to be sure to talk about that. I got a chart from somebody, and I'll show you their chart. But let's back out. You can see it's really a downtrend from, I mean, most of the early overnight we rallied up pretty strongly, but really from, you know, middle of the night, 2 or 3 in the morning on, it was all downhill. So, um, we had the red channel in there was the early one I used, the shorter term one, but I believe there's a larger two-tiered channel. And you can see that, and prices really stayed within that channel all day long, and prices didn't really bottom until we touched the other side, and that's generally what you'll see. And now we're back to the midline and we're finding resistance. Of course, we're starting another day, but a lot of times the price action will continue to work through that. So we'll see if we get back to the upper side and find resistance there or not. But let's back out, talk about the trades. And again, it's all shorts today. There's no longs. Um, there's actually a couple you could have considered. You actually could have considered this one long if you wanted, but we'll talk about that when we get there. First trade I saw was right about this 2 o'clock. I'm sorry, 7 o'clock hour. There's even a shorter term one working down here, like so. You can see that, and you get a break. That's your first break of it. And notice the new low here: pull back first entry, pull back second entry, and so that's a second entry short, and that's a big bearish bar. It's good for a scalp, nothing more. And then it rallies back up, and there's actually some resistance across there. But this is another second entry short on a bigger picture. Notice this is 2 legs up, then a correction, and then another leg up. So this is one leg. There's 2 legs in this first leg, pull back. So this is like a second entry short on a bigger picture. It's like a 1, 2, 3 quadruple top there. Um, it's a big bearish bar. I like that one. And I went back and forth about whether or not to make this one green, but it's real borderline. But I think this one is good enough to call it red. There's definitely a trading range across there. For some reason I can't get that line straight. Oops, there it is. You can see it working across there. And this was like a little failed break higher, and it turns down. And plenty of room to scalp out before you get back down near the lows. I'd really call that the lows right across there. You might have moved it a little bit higher to catch more of the closes, but I believe that's it right across there. And you can see this gives you a good chance to get in at the top of what looks like maybe turning into a range. There's definitely strong resistance right there. And then it comes back again, and again, you're coming down. You really start off the low here, and you get a first entry, pullback, second entry, and you could have taken this long, but I think it's too risky with uh, uh, most everything is see all the how the bars are all stacked up there. So everything is mostly trying to get back below the EMA, which really, when the EMA is flat like that, it doesn't matter as much. Um, but at this point, it looked more bearish than it did bullish, and you already had your break of this channel, close outside, and a new high, and we're working down. And so you could have gone long here. I didn't like it because of all the overlap and the fact that we were using the EMA as resistance. But when you break out of that, that's a good reason to go short. But when you come off that top, and that confirms this bigger trend line, um, still wasn't 100% sure about it because it looks like, hey, we get a break of the shorter term one right here. Um, so you just didn't know really at that point. But I liked it because it's coming off the top, and every other short is moved down to the low side. And just so happens this time it just keeps going. So, but there's a couple of different reasons to like that one. There's a trap there too. Hopefully you see that. Um, it's a second entry short as well. This swing low is lower than that one. So pull back first entry right there. Pull back second entry. So when it broke below that, there's your second entry right there. And so it's a second entry short. But notice how it broke above that bullish bar and turned down real quick. That's the way a trap will act, and you can't go long into that resistance. So um, this one, it's close to being green, but I'm not even gonna give it green because of all that overlap. That's congestion, and the odds are it's gonna break out and fail and turn down. Um, and it's really kind of a double trap too, if you think about it, because it did break out and fail, and you broke lower than that. So I guarantee you a bunch of people got short right there too. Um, and then they ran their stops and then turned it down. So it's like a little double trap almost. And then we break lower, pull back first entry, pull back, and you get there's actually a second entry right there. Um, so this is more of kind of a repeat pattern of this over here. You can see that resistance across there. Um, it's a double test of this high here, but more importantly, it's a big bearish bar. It comes off that high, and we're trending down. And notice how um, we kept getting in the lower part of the tier here, but we couldn't quite get down there. And then it kind of it comes up short about the same distance it overlapped there. That's a sign that hey, we may be gonna go lower. That's kind of, it's not something you want to bank on. It's just another reason you can throw in there. The big thing is that it looks like it's a failed second entry long. Got your first entry, pull back second entry. So it's a failed second entry long going up. It's right off the EMA. It's right off that resistance area right there, and it's a big bearish bar. That's the kind of bar you want to see. And you really had to be quick to get in this. You may not have caught that trade, and it just takes off like crazy. And what it is that most of the people that are trying to buy the lows figure out now, hey, well, I got fooled and we're going lower. And it just keeps heading lower. And then we get another little rally back to the EMA. There's your first entry, and then it pulls up and tries to go higher and then turns back down. Even though this doesn't make a higher low, the fact that it went higher right there um, and then turned down and almost closed on its very low, that's a good sign. So I like going short right there. Just trying to get a scalp out of it. This one really could almost be green. It's real borderline because we came off the low side, and generally you're going to go back to the high side. But the thing is starting to get weaker here. We've been really starting to trend down, and every time it comes back to the EMA, it's turning down again. So that's the reason I like that one. I figured it would probably just test that low at the very least before it would go back up. And because of that, if it didn't have that little trap right there where it broke one tick higher before turning down, I probably would not have marked that trade. So, and again, it's real close to being borderline green. So you really had to see what was going on there. You don't know that you figure it might try to test this low, but this thing just keeps going. And the only reason it didn't keep pushing down was because the trend line's there. Otherwise, you can see it would trade down past it, but it would close back inside the trend line. And then it comes back, but this is just a first entry. The signal bar is not very good. You just can't take that one. Even though it worked, you can't take it because the next time it probably won't, and sure enough, next time it doesn't. Then we're trending back up. It's real tempting to go short here, but notice what happened up here. We had a break outside of the red channel right here, and you've already had more than 2 measured legs down. You've really got 3, and they're really all about the same. Let's just measure them real quick. You can eyeball them and see they're real close. You can see that's almost a perfect move. And then you get another one. It goes a couple of ticks further. So you get 3 perfect measured moves down almost, and it starts rallying here. So you got to be real careful about going. Okay, I had a little interruption there, but we're heading back to the other side. It's really tempting to go short here. Of course, but by the time you get a break, you got 3 bars stacked up there, and 2 of them are dojis, and that's congestion. Doesn't mean you can't go short there, but without a break of this trend line right here, and you can see that perfect little channel working up, it's just real risky going short up here. So I don't think you can go short, especially after you've had a break. So you got to kind of sit tight on that one, and because you're probably going to get a retest attempt. And notice it comes right here, but when it turns back down off the trend line, and let me explain this one to you. This is actually your signal bar, and that's not a very good signal bar. But look at how bearish that bar is. Closes on its low. What I recommend doing on this is if it breaks below this bar, coming back and putting a stop where you were supposed to put it originally, a limit order, or not a stop, but a limit order, and seeing if it'll back up and fill you. And it would have. It backs up and then it turns back down again. You could almost go short below that with just a stop, because now it's right off that trend line again, and it's obvious that we're going to push lower. It's been really weak. And you do have look at this new high, pullback first entry, pullback second entry, so it's a failed second entry long. So there's some reasons to consider this signal bar regardless, but it's just when it's another doji, it's starting to look like a repeat pattern here, which in the end, this one went lower, but a lot of times you'll get fooled on those. So the way I liked trading this one was waiting on the break below that bar, the big bearish one. But since this is your signal bar, this is where you should have originally entered in, coming back here with a limit order. Because it is a trap, you could have used a stop here, and you almost could just use a stop here, because you still got enough room to get out before you get to these lows, but it's real close, and you just never know. And it did make a new low, but look what happened. You get the big bounce then. And so you got to be real careful with that one. You need to get in up here as high as you can. So that's the reason. And so this one could be green, but because it's a trap, it doesn't even have to be green. You could have really used a stop right below that signal bar. But I just don't like that signal bar, because you might end up just like it did right here, except it doesn't go down. It traps you and turns up, or just kind of like it did right here. You do finally make a new low here, but notice how you got all that resistance across there. I say resistance. You got all that support across there. And you can't ignore that support. It's just all the way across there. Pretty much fits right there. And so we break lower, and then we fail and we turn up. The reason I circled this in green is because it's a second entry, and somebody actually sent me their chart asking about this. Let me show you their chart. Okay, here's this trader's chart, and you can see they asked me right here, and my chart looks better than theirs. But look, this is their signal bar. Look at that signal bar. Not very pretty. I mean, it's got a lot of stem on each side, but it closed in its upper 2/3. That's a bullish bar. It's neutral to bullish neutral. And I would say it's more bullish than neutral because we closed 2 ticks off the high and there's 4 or 5 ticks below that. So that's a bullish bar. You cannot go short below that. Even though it's a second entry, and even then it didn't close. It closes outside his trend. It looks like his trend lines are very close to what I had, but it closes outside his trend line there. Now he may have been looking at this bar and saying, okay, look how bearish this bar is, but here's your signal bar right here. And going back to what I said earlier, if this would have been a real doji when it broke below here, you might have tried getting in a tick or so back. But that bar is just so bullish. I don't think you can't go short there. Plus, it closed outside the trend line, and you've already had your close, and you're kind of looking for um, a possible reversal or something anyway. And notice when it came back to the EMA there and the trend line, it gets a little resistance, but it pushes on through. You would think that it would turn down real quick, like here and here and here. Notice where all your good trades are when they come back to the EMA, they turn down real quick. And so when they push through, and you already got a clue here, it pushed through a little bit, and then you fall below this double bottom right there, and you get a little failed break lower, and you figure that's going to snap back. And you've actually got a failed break on both sides there. Let me come back to my chart, and you can see this is a trading range across here. You see that? And you got a failed break out the high side, and that might have given you another reason to enter short there. If you see that, which you should see that trading range. You're paying more attention to the support than you are the resistance, because you don't want to go short into support. Um, but that would have given you another reason to go short right there on this one. And but the reason I'm so scared of this one was because we didn't have a break of the trend line, and this was the first break, and I figured we're going to get a retest in reverse, because you've already had a close outside of the red one right here, and you've made 3 measured legs down to a new low. But anyway, look at the signal bar on mine. It looks better on mine than it does his, and notice how mine still everything closed inside the bar. So I'd be more apt to go short right there out of mine, but then you realize you're right into the support on a failed break lower out of that. Now we did trade down into this, but we've already had a break of the red channel. And if you noticed, and if you drew your trend line on the blue one, and you would have had, this is the low, it turns out that's the midline, but you would have probably had it at the low at that point, then you realize, hey, we hadn't been back up to the high side in a long time. And we just came off the low side. So there's a lot of reasons, but the main reason I don't like going short there is, first, your signal bar is not very good. Mine's better than his, but you're going short right into where that support was across there, and you've already had a failed break, about an equal break out the high side and an equal break out the low side. You've already had a break of your red channel, and 3 legs down, measured legs down to a new low. You got 2 measured legs down there, and you just don't have a very good setup, bottom line. I mean, and that's where a lot of people will get confused. They think because they see a second entry in a downtrend, I got to go short. But you got to look at everything, and you got to see the big picture. You got to take it into context. And if you get all the other things lining up, then you're probably okay. But notice here, that's your first break of this trend line working up. You got your break here, you tried to go higher and get a retest, then you get a 2-legged move back, and it's really tempting to go short right there, because it's coming off this big trend line, and you touched it a couple of times, but I was just really afraid that we might break higher and trap people and then turn down. But when you get another 2-legged pullback and you come down right off it again, and you get this big bearish bar, you can go short there. And really, this one, they both have matching highs, so your stop has to go above that one. So, and you definitely don't want to go short below that bar. You got to wait on this one. And look how bearish that is. And again, look how fast it took off. People realize that, hey, we're trapped. And then this really helped confirm. It really was difficult to know if this blue trend line was exactly right up here until you started getting the confirmations from there. But that you could really treat this like this is a new high, pullback, first entry, pullback, and a failed second entry long. Although if you did take the second entry long, it it would have got its scalp there. But that was a nice setup. And then you're working down. Um, it's tempting to go short here, but look at all the overlap. You're better off to wait and see, and notice how you get a breakout pullback short. Um, and that's your two swings. This kind of confirmed it. And at this point, you figure you're coming back down to the blue line too, so you got plenty of room, and it just keeps on coming. And notice how it did. It found a little resistance there because of that trend line, and then it comes back and tests that previous red trend line before turning down. Then you get the same thing here again. Um, you got a new low, pull back, first entry, pull back, there's second entry, but look at all that overlap. Again, it's kind of congestion, and you don't really get a bearish bar till here, but it can't break below it. It turns up, and then when it breaks above there and turns back down, um, I like that for short because they probably trapped some longs there. And the fact that we kept overshooting the blue line here, usually when you overshoot, it's going to reverse real quick. When it doesn't reverse and it keeps trying to work lower, then you got to figure, hey, it could be a two-tiered one, and it does end up running all the way down and bouncing right off the low, perfect two-tiered channel. Um, so I like that entry. And then you just get a repeat pattern here, almost exact repeat pattern. And notice how it breaks higher and turns down again. And it's right there at that previous trend line, right at the EMA. This one I went back and forth about whether or not to make it green. It's borderline being green, but you really don't get a closeout till here, but it still tries to make that new high and traps people and turns down. But it's just not a perfect setup. But at this point, you've almost got to reset from. That's the other thing, is you almost got to reset from this red channel, because you got this correction, and then you kind of get a new trend, shorter term trend starting down here. Now this one, I didn't talk about this one, I didn't have it on there, but this one did get a break. You got to close, and it's not a real bearish close, but it still closes outside the trend line and then makes a new high and then tries one more attempt. So these were a little trickier down here, and really you needed to have your red trend line extended because it kind of came back into play. But with the market being that weak, you'll see that sometimes. You'll get everything that looks like a reversal. But I'm guessing, I haven't looked at the time it took, but here's where we made the low. 10:42, 18, and we didn't really start going lower to 12, so it's well over an hour, and that's generally what your correction will be, at least a minimum of about an hour, and then the trend will start back up again. And that's, if I back out, it might be a little easier to see that. But you had the trend with the shorter term red working down. You had your break, a new low, and then we corrected for about an hour, and then it's like another leg, another move down. And what I would suggest doing is you measure that first move down, and you look for a possible measured leg down, and you can see we went much further than that. Actually, I would have given you a target of here, and we actually went a little further than that before we corrected. But of course, once it started heading lower, and look how it turned down right off that blue midline. This is way after 2 o'clock, and then to the tick on the measured move down here from between this side of the channel and this side. So the earlier part is pretty straightforward. I could see how somebody that doesn't see the big picture might get tricked into this, but with a good signal bar, I mean, that's why the signal bars are, I'm always telling people the perfect setup's going to have the signal bar to go with it. And mine looks better than what I showed you on his chart, but his chart didn't look very good. I mean, his bar was bullish, really. So, but I'm guessing he didn't see the channel. I'm guessing he didn't realize there's already a break and a move to a new low. Um, some different things there that I'm guessing he did not see. And I asked him to answer those questions before I'm hoping he sees that and does before he watches the video. Just and sometimes I'll do that. If you send me a question about a trade, I might send you back and ask you to explain why you thought it was a good trade, just so I could see what you're thinking and to make you think a little bit outside the box and try to. I mean, anytime you can figure it out on your own, it helps. And that reminds me of something else I want to share. Well, I looked for another email that I'd gotten, but I cannot find it, so I'm just going to basically tell you what it said. But this trader um, told me that lately he tries to figure out why, when he has a losing trade, he studies it and tries to figure out why it was a loser. And he said he can almost every time figure out why after the fact. And so that's progress, and that's the way it'll start. And eventually you'll start to see those same reasons why not to take the trade in real time. But it takes time and experience and, getting a lot of chart time. And so it's exciting, though, that he could see it. I'm sorry, I had an interruption there. But yeah, that's progress. That's what happens. But if you haven't heard me say this before, when a trade fails, there's always a reason because the price action is never wrong. So if a trade fails, you can almost always find a reason for why, and you just have to figure it out. If you can't figure it out, send it to me, and I'll tell you what I see. And generally, they're very easy to spot. Sometimes, you'll see one that fails that was really hard to see. But if you follow the rules 100%, just like the one that I showed you from earlier today, where that gentleman, he had a bullish bar, and you don't go short. If your signal bar is bullish, you skip that trade. You don't take it. And if he'd have just followed that one rule, he wouldn't have had that losing trade if he indeed took it. And how, I mean, he didn't say that he just asked why the trade didn't failed, but maybe he didn't take it. I don't know. But if you follow the rules, you won't have a losing trade unless you just are misreading the price action. Um, but definitely make sure you understand, because I get this a lot. People come in here and they think they're supposed to take, if we're trending, they're supposed to take every second entry, and that's not the case. A second entry is just one of the reasons you want to take the trade. You have to have the other reasons in place, and you have to follow all the rules. So just understand, really what I'm trying to say is understand that just because you see a second entry short in a downtrend, it doesn't mean you take it. You've got to have all the other pieces of the puzzle in place, or you can't have some of the other pieces uh, that would exclude you from taking that trade. So you got to look at the big picture, basically, is the easiest way I know to say it. So, but anyway, I'm going to wrap it up. This is almost 30 minutes worth. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.